Today is Thursday, July the 23rd, and I had a major glitch right there, so I have to start all over again. And I'm going to start off by looking at the volume. Look at the volume of all the stocks that the FinViz encapsulates. That's several thousand, much more than the New York Stock Exchange. And we had regular volume, but the Dow was continually dropping throughout the day, as was the NASDAQ that hit yesterday's close, and the S&P hit yesterday's close, and then we started to drop. So that is an important signal. The McClellan oscillator, which we'll bring up in our regular charts, tipped down just a little bit. The volume was in line with yesterday. The decliners led advancers, nothing magic there. Nothing extraordinary. But now let's look at our charts. Here's the Dow Jones. Dow Jones pulled it back a little bit and found support exactly on the 8 EMA. So that's a good thing. The NASDAQ pulled back substantially. But the NASDAQ was flying too high. I mean, look at this. Flying too high. 138.2, 150%. And it hit 150% on one of its waves, and it started to pull back. And that's the wave which was the COVID-19 wave. So if we take that one and we go back to February down to March, the COVID wave, let's highlight that one right there, didn't quite reach 150%, but is struggling at 138.2% and dropping. So that's pretty significant. That's a Fibonacci level where you would expect to see resistance, not necessarily a turnaround, but resistance. The volatility index ticked up a little bit. The S&P dropped a tiny bit. Apple dropped a ton, 4.28%, apparently because of some EU ruling or some congressional investigation, but that's just an excuse. Apple was at 161.8%, was really oversold. If we look at the that's not a good one either. Let's just go back to looking at hit its 138.2% and it found support. So let's look at that set of Fibonacci's here. That isn't a coincidence. The fact that it hit this price level and bounced. So now you have to go back and see, what does that level relate to? Well, here you have 127.2%. Here you have 100%. That would have been a double top with February of 2020. So that was the coronavirus pullback, and we had the double top. But if you go backwards, 78.6%, I mean, that's a real level. 1, 2, 3, 4, 5, 6 days. 61.8% looked like an area of resistance. 38.2% was an area of resistance here, and then we popped up, and then we came back pretty much to test it here. So this is a good set of Fibonacci's that hit a 138.2%, and there were buyers there. That's important to watch that. So I've got my Apple short 345 puts that expire 2 weeks from tomorrow, and sure, they were $900 in the green. Today they're $160 in the green, but I would expect to see a drop here. Here is my break-even point on those short puts. So people were asking about how to trade short puts. I'm not going to get into it in much detail here, but here is my break-even point on those short puts. It's below the 50 EMA, it's below the 50 SMA, and it's below cloud support. It's also in line with Chiku span and candle support. So I feel pretty good about that. Although it lost $800 today, I still feel pretty good about it. Caterpillar continuing to just channel sideways, certainly not what you'd expect to have happened given the downside in the S&P. Home Depot hit a new high today, but then pulled back to close to not a new high, but just a little bit under that. AT&T, which reported fairly decent earnings before the bell today, ended up pulling back with the market. The banks. Let's take a look at the banks. We have Bank of America, which the news is that Warren Buffett bought X billion dollars of Bank of America. That's a good sign. So if you're looking to buy Bank of America, take a look at its dividend, because Citigroup today just declared a 51-cent dividend on a stock that's worth $52. I mean, that's pretty darn good. Just below its 38.2%. Anyways, the message on the banks is that they were all up today with the exception of Goldman Sachs. Now, one of the other ones that we were looking at briefly was Square, and I don't see it here. I lost it in a motive wave upgrade. That's a shame. So let's go back to looking at Whirlpool. Whirlpool had its earnings before the bell today, and look at this pop. Up to 100% to a double top, and then it was just taking off up to 163. But where did it come back to close to? At its previous high. Exactly. So this is all about technical trading, folks. This is what technical trading is all about. Now, I had some shares that were not covered by short calls, and I sold them at 156 today, and we closed at 158. So sure, was I regretting it at 160? Of course. But I sold in the first 15 minutes, which I don't normally do, but I figure that Whirlpool was going to pull back, but they continued to move up. Let's look at its 5-minute, and you can see that when I sold at around 10 o'clock, 10:18, the stock did move down, and then it moved up and gained momentum and then came back to pull down. So I'm glad that I sold the extra shares that I had over and above what I had covered by short calls. So where are we going tomorrow? Well, this pullback is not all that significant. The NASDAQ is more significant because of the rejection at 150 and then at 138.2%. So watch the NASDAQ tomorrow and watch the NASDAQ stocks. Apple is our little beauty here, and let's look for support at 267.80 tomorrow. If we lose it, there's a really good possibility that Apple moves down to 356.